most people teaching options on YouTube have never actually done it with real money or real strategy in order to preserve their book. I sell options for a living, and I also am a portfolio manager, so the strategy I use is for long term to either increase a cash position or to hedge against a portfolio. So let's see how I actually use these strategies on a stock like AST Space Mobile. I will be doing this more often. Like, I'll show you guys the stocks that I'm looking at to get into, positions that I'm entering as well, and why I'm entering them. So if you guys find that interesting, do subscribe and hit the like button. You can see here the latest options that I've sold were puts against AST Space Mobile. I do own these shares. So you can see here I sold a put for the $64 strike price, 20 contracts, and it was about $129,000 worth of collateral. So I'll go through exactly why I did that and how it differs from what people are teaching you on YouTube. You can see when I sold these contracts, we were hovering around the $53 level, which I know what you're thinking. If we're hovering at 53, why would you sell $64 puts? Well, this is exactly what I'm saying. The overall mindset for how I sell options as a portfolio manager in comparison with the average option seller. Typically on YouTube, you're taught, as an example, if we're trading right here at $66, where we are hovering pre-market, what you'll be taught is to look for the 20 delta, go out 30 days, and that's a safe way to get into a stock. I 100% agree. If you're looking to get into AST Space Mobile right now, you're doing your due diligence, you're happy with the stock, you're happy with the sector, happy with the future growth, happy with the potential of the stock 3 to 5 years out with a long-term view, you're projecting a CAGR of about 20 to 30% every single year compounded, which is fantastic. You're happy owning the stock. You don't mind what's going to happen in the short term because you believe in 5 years' time we're going to be over $500. I agree, right? So you're taught, okay, go out 30 days, say to the broker you're happy buying at 50, sell puts for $50 at $50 strike price, and collect the premium. Sit back, wait till you're assigned into the stock and get paid to wait, right? That's what you're taught. But what I do is I'm selling puts in an aggressive way because I'm anticipating a bounce off this support zone to take us higher. So what that does is that allows me to lock in 70, 80% of that premium within a week. And that is obviously a riskier way, but at the same time, the premium that I'm getting by selling aggressive puts puts my break-even entry price around the same price I'm selling the option at. So what actually is my risk? My risk is simply, if the stock continues to go down, let's say into the 40s at that time, I would have had to buy those shares at $64. And my break-even price would have been at that point $57 because it was an $8 premium. So $57 and we're trading in the 40s. Okay, what would I have done then? If I got assigned those 2,000 shares on that strike price, I would have gone out another month and sold covered calls at $60. And then I would have collected another $4 premium per share, which would have effectively brought down my break-even price to $53. And also, if we did get our shares called away after that month, I would have got capital appreciation on the shares as well. I have my shares called away at a profit. So that's how the thinking goes how I'm looking at selling options against a stock. It's not simply just to get some income. It's also to hedge the portfolio for any upwards movements or any downwards movements. So that's how I'm thinking of when I'm actually entering into position into a stock. So that's the key difference. Whereas we're taught on YouTube, and I've seen the videos, I've watched the videos, I enjoy the videos, I enjoy the content, but it's not a way that is focused for long term because you can really FOMO into it. For example, if you wanted to get into ASTS right now, which is a very, very volatile stock to get into, especially in the space sector as well, where any sort of positive news with SpaceX pulls the stock up considerably. If you really want to get into the stock at $66 and you're selling $50 puts going out into September, this stock could run up to $80 today. It generally can move 15 to 20% in a single day. 5% pre-market, 15% during the trading hours. Easily done. It's done it numerous times before, you can see. It does it all the time. So if that happens, as humans, you being in $50 strike price and the stock being at 80, you're going to think, wow, I missed the boat. If I didn't sell options and I just bought the actual stock, I'd be up $15 per share. And what are you going to do then? You're going to close your position out in a profit and you're going to chase and buy the stock here. And then the stock's obviously going to come down because it's going to get exhausted. That's how it works. That's how options get you out. That's how options catch people out for the average trader. Otherwise, it's free money. So the way you have to think about it is you have to trade it kind of like how I do, with an indication and an expectation of where you see price going. So right now, if I wanted to get into ASTS, I would sell at the money. This is not financial advice, but I would personally sell at the money puts, because by me selling a put saying I'm happy buying right here at $66, going out a week, 2 weeks, 3 weeks maximum in my own opinion, I'll probably get 5, 6, maybe even 7% premium. So that will bring down my break even to 60. So effectively, I'm entering the stock today at $60. It's a win-win for me. And if we go higher and close at $70 or $75 by that expiration date, I've still collected 6% on my money, and I can do the exact same thing to get back into the stock. And I know what you're thinking. What if by then we're at $80? If we're at $80, I've still collected 6 or 7%. And by that time, if I have indication and belief that the stock's going to continue going higher, instead of selling at the money puts, I'll sell puts at $90 and say I'm happy buying at an even higher price, because then I might get 15% in that same 3-week period. And if we close above $90, I've collected that premium of 15%, and I've not had to buy any shares. So effectively, when that stock does actually pull back into the 70s or 80s or stays in the 90 zone, I can either buy the shares or I can do puts again until I am actually getting assigned. So the way to look at this is how I use this as a positioning in order to grow my account, hedge my account, and protect my overall position. Because I see this as a vehicle that can allow me to either increase my share size over time or allow me to get into a stock at a more favorable price. So it's basically using leverage in an effective way. I would never sell naked calls or would just simply buying calls or buying puts, because even I believe that's way too risky, especially in a market like this where any sort of news indication from Trump can cause the market to absolutely drop 10-15% or oil to spike. But that's how I sell options against certain stocks that I'm holding within the book. I find it very useful. I have not sold any covered calls as of yet because, like I said, the stock price is so volatile, we can jump to 80. So at the moment, I'm waiting for us to get above all the EMAs, which we failed to get above right here, you can see. And then once we do hold effectively above $80 and start to see some movement trending upwards, when we get to these 90 region, I'll be selling some covered calls. And I'll update you guys there, showing how many premium I've collected. I'll update the spreadsheet and whatnot and show you guys exactly what I'm doing step by step. But yeah, there are a few other stocks that I'm actually looking at potentially getting into, but just waiting. Like one of them is Robinhood, which is showing tremendous strength because obviously Bitcoin is starting to pick up as well. So that will be very big for their crypto side of things. So I'll be waiting to see that. And if I do, I'll be selling puts probably about 95 or even 100, just because it's a nice round number. Psychologically, people just want to be either accumulating or selling there, so you might stumble around. So it could be a good place to actually collect premium over a good couple week period. If you guys enjoyed this video, smash the like button, subscribe, because I'll show you guys the exact way to grow your own account and do it sustainably. Thank you all for watching. I really appreciate all of you, and I'll see you in the next one.